Well, ladies and gentlemen, we've done over 1,000 videos in the history of this channel, and I think we're about to get into something we have never gotten into before, which is panic buying. There is absolute panic buying going on in the stock market right now, all right? I want to touch on 4 points in this video. I want to show you some charts that will illustrate how much panic buying there is going on in the stock market right now, okay? I want to go over panic selling versus panic buying. You hear a lot of times, people talk about there's panic selling in the market, but you never really hear about people talking about panic buying. There can be both, okay? We're going to talk about why this occurs. Why does this situation occur? Why does this all of a sudden there's just a panic buy going on? And what do you do in this situation? We're going to touch on all 4 of those points in this video here today. By the way, today's video is sponsored by my private stock market membership group. That's the first link down there in the description. If you want to join that, I would love to have you in there, all right? First off here, let's look at some charts, all right? This one just looks at the Dow Jones Industrial Average. And what we will see, this is a 1-year chart going back from a year ago. And what we will see is we're going to see pretty normal activity for the most part for most of the year, all right? Pretty much 9 months out of the year, if not more than 9 months. We're pretty normal activity. You're going to see some moves up. You're going to see some moves down, which this is all normal activity on a daily basis, on a weekly basis, or a monthly basis. Sometimes you're going to have some good months. Sometimes you're going to have some bad months. Overall, you're going to have a lot more good months and bad months in the stock market. That's just how it is. So pretty normal activity up until we get into around the December timeline. And all of a sudden, in a very short amount of time, about a month span, the stock market just falls in a dramatic fashion from over 26,000 to the 21,000 range in literally a matter of about a month. It almost went down in a straight line. That right there, ladies and gentlemen, is what you call panic selling in the stock market, when you can get almost a straight line down for the market to just move down and down and down, all right? But now we look, and basically starting right around January, we're going to look at this chart, and it's almost a straight line up. It's not quite as dramatic as a drop, and usually panic selling is a little more dramatic than panic buying, but what we will see is it's almost up in a straight line pretty much as the market bottomed around that 21,000 range, 21,700. We're going to see it's just pretty much over the past 2 months just gone up and up and up and up. Some days were down or some weeks were down, but for the most part, it's pretty much up in a straight line, just not quite as dramatic as a panic selling situation. Now we're back to around that 26,000 range. And it's not just the Dow Jones. If you look at a chart of the S&P 500, we're going to see almost an identical situation where the markets were pretty fair, pretty normal most of the year. And then you see around that November, December timeframe, a dramatic drop in the markets, almost down in a straight line in a rapid fashion, from the S&P 500 being near 2,800 to dropping down to the 2,300 range in literally about a month's time. And then look at the climb straight out of that, just buying, buying, buying. If we look at the Russell 2000, which tracks a lot of the smaller companies out there, right? We're going to see very normal activity for most of the year, and the same exact situation happened. And look at the panic buying that has happened since then. It's just been up in basically a straight line. And then lastly, this last one, we'll look at the Nasdaq. Same exact situation. All the stock markets have done it. The Dow, the S&P 500, the Nasdaq, the Russell. You can look at any of those indexes and you're going to see basically there was a dramatic drop in around the December timeframe, November, December, just down in a straight line. And since then, basically as soon as we got into 2019, it's just been up and up and up, okay? Now let's be very clear. Both of these situations are very silly. Whether we're talking about panic selling in the market or panic buying in the market, both do not make a lot of sense, okay? They just don't. This is what I call fear of missing out. And it happens whether you're talking about the market going down or the market going up. What you're going to see is if there's all of a sudden a trend start to go and this trend gets stronger, you're going to see all of a sudden a lot of money outflow out of the stock market if the market's going down, and it's just going to push the market down at a much more rapid pace. There's going to be more and more panic selling, and you'll just see these ridiculous down days where the market just goes down and down. But it's just as silly pretty much coming on the upside, because you're going to see people just flooding money into the stock market all of a sudden, and it's like, why weren't you doing that 2 or 3 months ago or 4 months ago when the market was going down and down and down? The fear of missing out can happen whether we're talking about a stock going up or an asset in general going up. Real estate doesn't matter whether we're talking about it going up or going down. There's always like a fear of missing out that can happen in the market in general that freaks people out and say, man, I got to get out of these stocks right now. I got to get out of real estate right now. Or man, I got to flood in all my money right now. This is what ends up happening. We got to ask ourselves, Who is really at fault for panic buying and panic selling in the stock market, all right? And a lot of people might say, well, it's those retail investors, the guys like you and me, okay, that, are investing, I don't know, tens of thousands or hundreds of thousands of dollars at a time. It's us retail investors. We must be the ones that are freaking out and panic selling and panic buying the market. And that's a really cute idea, that it could be the retail investors that are causing these panic buying situations or these panic selling situations. One, retail investors don't generally make dramatic moves like that, like sell out of positions so fast or get into positions so fast like that. It's generally not that situation. Also, retail investors, we just don't have that type of capital to move markets like that. You're talking about, when you get dramatic moves like this, you could be talking about outflows of money or inflows of money in the tens of billions or in the hundreds of billions of dollars. Us retail investors that might buy $10,000 or sell $10,000 at a time or 100, we just don't have that type of capital. So who is really responsible for the panic buying or panic selling in the stock market? At the end of the day, it's the Wall Street fellas. Let's be very clear about this, okay? The fund managers, the massive hedge fund managers, the massive mutual fund managers. These are the individuals with billions of dollars of capital, tens of billions of dollars of capital, or even hundreds of billions of dollars of other people's capital that is pooled together, and they move that money around based upon where the market trend is at a particular time. And they don't want to get caught with their pants down, meaning if the market's going down a bunch, they don't want to be necessarily a net buyer because they might look bad to their peers or their other investors who don't really understand how the market works and why being a contrarian a lot of times can make you a lot of money in this game. They just like to follow whatever the trend is. So you have these type of individuals that will follow each other around. And it's like kids playing tag at the end of the day. If you ever watch kids playing tag, right? The way they play tag is they don't play it in the smartest way, right? They follow right behind another one and they try to chase after that one. Then they don't really worry about where that kid's going, where the next move for that kid's gonna be. They just go wherever that kid's at, okay? So if the kid goes left, they're gonna follow right behind them and go left. They're not gonna think, oh, they're probably gonna go left next. Let me already start cutting left, right? They're just gonna follow directly behind that person. And that's exactly what a lot of these hedge fund and mutual fund managers do that manage billions or tens of billions or hundreds of billions of dollars. They're like kids playing tag out there, whereas all of a sudden a trend will change and they'll say, shoot, I got a fear of missing out. If everybody's selling, I got to sell out of these positions too. Oh, everybody's buying, shoot, I don't want to underperform what all the other hedge fund managers are doing, all the other mutual fund managers are doing. I need to buy in these stocks. The stocks are going up like crazy. I got to buy in. I can't miss out on this. Or what might end up happening is those people might end up saying, you know what, the other hedge fund manager over here, the other mutual fund manager is doing a lot better than you. Why did you underperform the market so much? Here's what I'm going to go ahead and do. Give me back my money that I have, invest in you. I'm going to move it over to them over there. They don't want to be in that type of situation. So they don't necessarily care about outperforming the market a lot of times. They're just trying to stay with everybody and play tag so they can be somewhat close to them, not worrying about where the next move is, worrying about what the move is right now. And so the great thing about being a retail investor, right? Someone that you're just investing your own money, whether it be thousands of dollars or tens of thousands of dollars or hundreds of thousands or even a few $1 million, right? The great thing about being a retail investor, you don't have to answer to anybody. You can make moves how you want to make moves. You can ask yourself, do you want to be a wolf or do you want to be a sheep in this situation? Do you want to be a contrarian? So in situations like October, November, and especially December, those were unbelievable buying opportunities because it was just panic selling in the market and there were a ton of great deals in the stock market, right? And you could have been a buyer of stocks and been buying and buying and buying, right? Or you could have just said, wait, I'll wait till the market's back up and then I'll start buying stocks like a lot of these fund managers have done. They've waited for the markets to come back and get to a certain level. Oh, the market's back to 23,000. Oh, the market's back to 24,000. Now I can start buying again. Oh, the market's back to 25,000. Now I can start buying again. It looks like the market's safe again because they're trying to worry about their clients and all this type of things when they missed out on great gains. Like the amount of stocks that are up 20, 30, and some even 40% since just the beginning of January is an astounding amount. Like it is a lot of stocks that are up 20, 30, or 40% just since the beginning of January. And keep in mind, this is what's today, February 19th. Like we're not even 2 months into the year. And we're talking about massive amounts of stocks are up 20, 30, 40% from their lows they hit in that late December and early January timeframe. And so that's the most beautiful thing about being a retail investor and investing your own money. You don't have to worry about, you aren't investing other people's money. You don't have to worry about that. You could be a contrarian, and while the market's dropping like crazy and everybody's panic selling and you're buying and everybody's like, oh, you're stupid for buying. No, you're going to look very smart when things flip around, right? And at the same time, when you get in a situation where the market gets really elevated, you don't have to buy anymore. You can just hold, or you can sell stocks if you think they got overvalued, and you can make moves like that when everybody's like, oh, look at the market, it just keeps going up. You need to be buying still, right? It's the great thing about being the retail investor. It's the best thing ever because you don't have to answer to anybody. You don't have to worry about, who's going to judge you out there and who's going to say, oh man, I had $1 million invested with you. I'll need that $1 million back now because I'm going to go invest it with them because they're doing a lot better over there, which is the game fund managers are playing out there. And that's what really causes the panic buying out there and the panic selling, guys. And honestly, you can just look at the charts. It's straight panic buying over the past month or two. It's just pretty much up in a straight line. It's just not quite as severe as when panic selling. Whenever you see panic selling in the market, it's always more violent than panic buying. It's just the way it works out. But both are what I would call panic buying and panic selling at the end of the day. When you see moves that dramatic, the amount of money that needs to inflow to the stock market or outflow to the stock market to cause, markets to move thousands and thousands of points like that, guys. We're talking about dramatic amounts of money. It's not like it's just a small amount of money, right? So anyways, I hope you guys enjoyed this video today, kind of talking about panic buying. It's something that's almost never talked about in the media, and you just never really hear about it. Like I said, I got 1,000+ videos on the channel. I don't think I've ever talked about panic buying situations, but it absolutely is a real thing and it absolutely does happen. Hope you guys enjoyed this. Make sure you hit a thumbs up if you did. Thank you for watching and have a great day.